Hello and welcome to Market Views, a podcast series of Open Business Council and JPFS, where we discuss financial and trading news, interviews with key personalities, and engage with our audience. Now, today, we have an update from Peter Kristensen and Adam Hale from Trademakers on the last 6 months of development. So welcome, Peter, and welcome, Adam.
Hi, Hilton. Thanks a lot for the introductions, and thanks for having us.
So, Peter, we're halfway through 2023. Can you give us a 30,000-foot view of how the investments on Trademakers have fared during this difficult time?
I gotta say, it's gotta be a 30,000 feet answer because there's so many things going on in the market at the moment. What we've done is we've launched last year Trademakers together with SGT and JP Fund Services. We have quite a few products on the platform at the moment. There's a lot more coming on. We've had a lot of feedback on how it should look, and we're improving it all the time. So all the constructive feedback that we got from the managers and also from the investors, we've taken in. So we're improving everything at the moment. It's been quite exciting times. Gotta say, when people say it's difficult, yeah, it is difficult times. But when it's difficult times, there's also a lot of opportunities. And those are the opportunities that we're actually trying to seek and we're pursuing. We've been past 6-9 months. We expanded our network. We're represented in 6 different countries, going into the 7th country that's been launched like 4 weeks ago. We're also expanding our network with different family offices in different areas. So it has been a difficult time, but there's so many opportunities out there that look at the positive things, look at the positive opportunities at the moment. And that's what we've done.
Thanks. And Hilton, I'd like to reiterate what Peter said. Thank you for having us again. I think to carry on a little bit from what Peter was saying, there's been some really interesting feedback from investor groups and program managers. So as a result of that, over the next sort of 4 to 6 weeks, we are restructuring the Trademakers website to focus the attention on those parts of each program that our investors are really keen to see. We're cleaning up shop a little bit, and that will enable us to add, over the remaining 6 months of 23, a lot more interesting programs from different asset classes. We have a number of asset classes already, and we have one mixed foreign exchange portfolio, and that has really got the attention and got a lot of interest from our investor groups. So during the course of the summer, we can expect a bit of a revised and updated website. That will then allow us to start bringing on board some of the new asset classes. That includes bonds and 1 or 2 other surprises. So it's going to be an interesting autumn as we head into it.
Thank you. Now, what should investors consider when deciding what type of investments to place their portfolio into in the next 12 months?
Thanks, Hilton. That's a tricky question, what people should actually do the next 12 months. And if we knew exactly what we would or what we should and what investors should actually place their money into, then it would be a totally different ball game. We got our views on things. We strongly believe in renewable energies. Timing is absolutely perfect for, let's say, hydrogen. Hydrogen right now is the hype in the market. We're actually looking at success rates. Then timing is 42% of success. And 25% is the team and so forth. But timing right now for renewable energy, especially hydrogen, is really, really good. We only deal with alternative investments. So, and we would never actually recommend to put more than 20-25% of your savings or your portfolio into alternatives, depending on, of course, what's your risk appetite. What we've looked at, that's just my humble opinion. We reduced our stock portfolio, our stock allocations. That was last month, simply because we got a feeling that it's overheated at the moment. We might be wrong, but rather safe than sorry. For investment, for alternative investments, going into different things, we believe, and I believe, that we could actually be looking at a digital asset bull market. There's just something going on out there with all the negative stuff that we hear. Now regulations is coming in, and it's still holding, and it's still being positive. We believe that the second half of 2023 could be a really interesting market for the digital assets. And that's why we actually invested into it. Not individual coins, but we put it into a crypto index strategy, not run by us, but always by alternate external managers, because we don't know which one is going to do best. But an index is always good to place money into if you don't know directly which coin to go into.
Yeah, just again to build up on what Peter was saying, Hilton. It's I think the recommendation or best advice that you hear across the marketplace, regardless of whether it's for the next 12 months or the next 12 years, is to look at programs and investment strategies which have delivered returns, managers that have experience, and the regulatory status and the security that investors are looking for. It's a very, very choppy market at the moment. Here in the UK, we're seeing interest rates of eye-watering proportions. The Bank of England struggling to get a handle on that and failing to admit its errors. So the underlying reason for the creation of trademakers was to address this exactly this issue. Where do you put your money if you are not an expert in the financial markets? We're building out this portfolio of multiple different strategies run by different grades of professional investment managers and asset managers, guys and girls who do this professionally for a living, day in, day out, that have the time, the resources, and I suppose, the appetite to really dig into the details and to create strategies that adapt to changeable market conditions. As Peter said, it's a question of timing, but it's also a question of your risk profile. The alternatives marketplace itself has seen a massive increase in the last 12 months. The old reliable stocks and shares approach that people have been running the last 30, 40 years, that is looking a little tired. And that's why you're seeing BlackRock and many of the other, multi-billion fund organizations out there switching over to the alternatives, because there's an awful lot of opportunity and there's a great deal of variation in what they offer. On the renewable side, absolutely. This is a relatively short-term turnaround. The first project that we have on Trademakers is 14 to 18 months. Our investors are looking at, doubling, possibly getting close to tripling their money during that time. But like any other program that offers significant rewards like that, it's not without risk. But so as part of a portfolio for the more risk willing, definitely we want to be looking at renewables. And again, we've seen the digital space consolidate again over the last 6 months, and I think we're going to see the launch of one or two very, very exciting stablecoin providers before the end of 23, and that has the potential to begin a real revolution in the financial markets. It's going to be very exciting, and you want to be aligned with experts, people who have cut their teeth in this industry and actually know what they're doing. That's our advice, and we try to bring those kind of experts to the platform and put them on Trademakers so that the audience and our investors can decide for themselves.
Wow, that's very interesting. Now, you've recently launched an investment in renewable energy. Now, can you expect to tell us a little bit more about the opportunities to invest in this new growth sector?
Yeah, Hilton, again, to come back to the other questions before and what Adam was actually saying. Renewable energy, everybody likes it. It's it is a good investment, but it's also a good investment because there's so much political support about doing this and investing into renewable energy one way or the other. It could be wind, solar, whatever it might be. One thing is, what we see now, what I mentioned before, hydrogen is the hype of the market right now. And I think it's going to be hype of the market for the next 4, 5, 6, 7, maybe 7 years. We can see Japan is actually looking to spend around $107 billion in hydrogen projects. We're seeing China actually doing a lot of testing and so forth. That's the market where we believe and where we're actually going into. And what else can I say? We heavily believe in renewable energy. Adam, I think you know a lot more about this section than I do. So if you can answer that one as well.
Of course, be delighted to. I think the key fundamental underlying every renewable energy project that we are considering that we may bring into the Trademakers platform is, does this solve a real world problem in a commercially viable, profitable manner? So that, as Pete said, we're looking obviously at solar projects, and different locations provide better results for solar. Prices of solar are coming down. It's solving a problem. It's using natural heat to generate electricity. Wind, of course, in areas like Scotland, where we have Whitehill, the first renewable energy investment on Trademakers. That's an obvious choice. It's based right in the middle of turbine country in southeast Scotland. But there are other areas, such as anaerobic digestion solutions, which again are tackling the farming, agricultural issues. And the technologies there allow us to prevent the release of damaging, harmful gases, and in turn take that energy and turn it into a clean, renewable source for the farming industry, for transport, and heavy industry. So do they solve a real world problem? And do they do so in a profitable, commercially viable manner? If they do, then we're interested. Then there's a good chance you're going to see it on Trademakers.
Well, we did do a very interesting interview with Whitehill. So as we've seen, there have been significant increases in interest rates across Europe and the United States. Now, how should investors position themselves and their portfolios for the next 12 months?
Thanks, Hilton. Seriously, that is, it's a tricky question. What's going to happen? Where should people actually place their money when interest rates is going up? Interest rates is going up because it's been fighting the inflation that can be due to several things, COVID and so forth. Everybody's got an opinion about the market, what's going to happen when the interest rates is going on or going up. Now, funny thing is, interest rate goes up, stocks should be stopping, should be going a bit down. But at the moment, it just keeps on going up. What we saw last week is actually that bonds are going down, interest rates going up, and stock market still going up. So, as mentioned before, we've decreased our stock portfolio allocation simply because of this. I believe that we're going to see a second wave of the interest rates hikes that we've been seeing around in US, UK, all over Europe. So we're going to see the employment probably in 4 to 6 months' time increase, maybe not significantly, but we're going to see an increase in unemployment. This will, of course, affect the consumer spending. It's also going to affect the real estate market. Again, this is fundamentals. Fundamentals takes time, but fundamentals are always right. I would be looking at the technical charts instead. I think it's much easier. Again, I would be really careful right now what's going on. It's just a gut feeling. But something, again, changing the fundamentals is like changing a tanker. A tanker takes maybe 18 miles to turn around or 10 miles to turn around. A speedboat takes, 20 meters. So in the fundamentals, that's a tanker. So I would be very patient, but I would be very, very careful of what's going on at the moment. and place yourself. Sometimes cash is always good to have on the account, or bonds.
Now, the multi-diversified FX portfolio program has delivered returns of nearly 82% over the last 3 years. Now, do you plan to release more such portfolios for the investors?
Yeah, thank you, Hilton. Thanks for bringing it up. Yeah, we're delighted with the performance really since launch of the Diversified FX portfolio. And I mean, for some of the viewers who perhaps haven't seen all of the videos we've been releasing, what we've done with this portfolio is we've taken some of the leading foreign exchange, FX strategies and the managers behind them, and they're still available as individual assets and individual investments to make. But we've combined that into a portfolio, so we have much, much greater risk diversification. We've got diversification in the strategy and in the style of the managers behind it. So yeah, 81.5% over 3 years. We're delighted. Our investors are delighted, and the managers are keen to explore what else we can do together. But in answer to your question, do we plan to release more such portfolios? Yes, we do. Watch this space.
Yeah, and just to take over from Adam, 2023 been a tough year. I would say not been the best year, not for the portfolio either. The first 3 years that we've been running this has been really, really good. We haven't lost money this year. We're still in a small plus, but it's not as significant as were the previous 3 years. Again, that's just market conditions. Most important thing is what Adam was saying is the diversification within the different strategies. When we're talking to algo, we're talking quant, we're talking trend, we're talking systematic trading. So that allocation in between all the different strategies is simply to have the diversification. Also, the biggest drawdown that we've had in this portfolio on a monthly basis is 2.3%. Or sorry, 2.35% to be specific. But that's the whole point about the portfolio. What's coming up is this portfolio will be listed at a certain time. We're talking to different exchanges. Will be listed on the blockchain as well. Not an ETF, but a bit like an ETF. So people can actually invest into this portfolio via the different crypto exchanges. So that's the things that we actually got in the pipeline at the moment.
So, gentlemen, can you tell us what new investments or managers we can expect to see on trademakers between now and the end of the year?
Yes, thanks, Hilton. I think from my side, I'd like to focus attention very much on the renewable space. We have been, since the launch of Whitehill in Scotland, we've been inundated with projects ranging from more projects in the UK to Germany, the Middle East, and in the States itself. All of these projects that we're currently assessing for potential inclusion on trademakers all achieve the goals that we set them, which is, are you solving a real world problem? Are you removing pollution? In some cases, that's the case. In other cases, they are simply generating energy from raw natural resources, which are utterly sustainable. All of the technologies involved in all of these projects, though, are proven, established technologies. Our investors want to see, appreciate that there is a risk in projects before they are fully operational, but we've removed the risk of using, new technologies. We want to see technologies which have already established themselves, which have proven their business case and their technical case, and can deliver the results that the financial plans indicate. So the risk really comes down for a lot of these projects to the planning permission, which we and our partners are making very, very sure that we have central government, local government, and planning officers fully on board before we even put this in front of our audiences. So will there be more? There will. They will be in the renewable space, various locations, various technologies, and to an extent, a varying degree of risk. But the returns are solid, and all of these projects are multi-decade projects. So once they're up and running, they're going to run for 20, 25, 30 years.
And to continue on that, for different investments actually coming up, we have our Latin America bond portfolio in the background, and we decided actually to put it public. So I would say us ordinary, normal investors have the possibility to go into these structures, which is purely based on a basket of bonds in different areas. At the moment, it's yielding around 8.5%, 8.40 to 8.50, 8.60% on a yearly basis, which we believe it's very attractive. And remember, even though it's Latin America, it's actually dollar denominated, because we don't really want to take the risk on the different currencies in the different areas and the different countries. So that's definitely coming up. We're also coming up with, I would say, a crypto index trading program that is EU regulated in a structure there. So there's quite a lot of actually things come up. We'll come up with, we're working on algo quant crypto strategies based on futures trading that we are evaluating. It will be in our sandbox, and we can, on the next video, we can actually talk about what the sandbox is actually doing. But we're evaluating everything. We're investing our own funds first into every single program before we actually give it out to ordinary or to the public. So there's a lot on the drawing board, but it's got to be evaluated. We have to do our due diligence first, and that's it. When it's done, we can publish things.
Thank you, Adam and Peter, for an interesting update on the development of trademakers, and we very much look forward to our next regular podcast on market views. So follow us on jpfs.com and openbusinesscouncil.org, and please engage with us on these links below, and as well as on LinkedIn and Twitter, and send us some of your questions for our next episode. So goodbye, and thank you for watching.